We've been a republic for 247 years. In the first 244 years, we created about $10 trillion of money supply. Then in the next 2 years, after the lockdowns, the powers that be, shall we say, I'll call them the idiots in charge, decided to print the same amount of money, another $10 trillion. It was a horrible idea. And it's been the downfall of every empire in the history of mankind.
Despite the official narrative portraying the U.S. economy as stable, experts are sounding alarms about an impending disaster that has been quietly building up for decades. The looming threat stems from relentless money printing and currency devaluation, posing the risk of transforming the United States into a scenario reminiscent of the hyperinflation crises witnessed in the past, such as in the Weimar Republic or Venezuela. Mark Yusko, founder and CEO of Morgan Creek Capital Management, joins the ranks of crypto investors and sound money advocates in emphasizing the urgent need for corrective actions to avert this crisis. Yusko, a renowned hedge fund manager, has been warning about the impending debt crisis for years. He points to the unprecedented amount of money printed in the last 3 years, equivalent to what was done in the first 244 years of the nation's existence, as sealing the fate of the US dollar. Examining the nation's escalating debt, which currently stands at a staggering $33.68441 trillion, reflects the severity of the situation. The trajectory of the national debt, doubling and even more than doubling at various intervals, paints a grim picture. Yusko argues that the ongoing cycle of accumulating debt, higher interest payments, and deficits is a vicious and seemingly unstoppable cycle, making it extremely challenging to break free from this economic predicament. In a recent interview with Money Tree Investing, Yusko further delves into his somber outlook on the U.S. economy.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
So the first thing is, I will argue that we don't have any inflation. What we have is currency devaluation. And you say, well, Mark, that's the same thing. Kinda, but not really. Inflation, right, in my mind, good inflation is where you have excess demand and limited supply of goods. So the price rises. And that's what you see in boom times, right? There's not enough supply of goods or service, and there's more demand, and the price has to rise. That's basic economics 101. So that would be the good kind of inflation. And that can be fixed by increasing the supply, right? Let's say gold prices are super high. You want prices to come down. You just got to go mine more gold. Or service prices for, wait staff is really high. Well, then you got to, train more wait staff or produce more engineers if engineering salaries are really high. So supply and demand works really, really well. What the bad kind of inflation that I will argue isn't inflation, but they call it inflation, is currency devaluation, right? And what happened in 2020, this is crazy when you actually say it out loud. So we've been a republic for 247 years. In the first 244 years, we created about $10 trillion of money supply. And just because the T word is thrown around a lot, and nobody really, a trillion, okay, one single trillion, you and I, right, would have to sit here together for 31,710 years. And it would be tough to come up with stuff to talk about for that long. And we have to spend $1 every second for 31,710 years. That's a trillion. So we printed 10 trillion of these dollar bills. Now, they're not really paper anymore. They're ones and zeros and ledgers and bank accounts. But we had 244 years, 10 trillion. Then in the next 2 years, after the lockdowns, the powers that be, shall we say, I'll call them the idiots in charge, decided to print the same amount of money, another $10 trillion, all under the guise of, well, we need this to fight COVID. No, you don't. It has nothing to do with that. It was this woman, Stephanie Kelton, convinced a bunch of people in the administration that this was a good idea. It was never a good idea. It was a horrible idea. And it's been to the downfall of every empire in the history of mankind, right? There have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. Why? Because the governments printed too many of them and the value went to zero. It happened in Weimar Germany. It happened in Zimbabwe. It happened in most recently in Venezuela. And it's happening right before our eyes in the United States. So what happened is they printed all this money. So think about it. If you had 10 trillion over here on the left side and it print another 10 trillion on the right side, what just happened to the value of the money on the left? It just got cut in half. Think about that. It literally, the value of the currency got cut in half. So I live in here in Chapel Hill, North Carolina, and according to Zillow, over the last 3 years, my house went up about 50%. No, it didn't. My house did not grow. My house did not get more efficient. It actually wore out a little bit. I had to replace some of the driveway and I had to put money into it, but it didn't get better. My house did not get better. The money got worse. I use the example of gasoline all the time. Well, what's the lowest price you remember for a gallon of gas, right? I'm old, right? 60 years old. 33 cents. Totem Lake, Kirkland, Washington. 33 cents. I just paid $4.33 for a gallon of gas.
From the time he purchased a gallon of gas as a teenager to the most recent purchase in 2023, the cost has surged over 14 times its original price. The hedge fund manager highlights that the gasoline currently sold is not more efficient than the one he bought for 33 cents in his teenage years. If anything, the quality may have declined. The sole factor differentiating the two instances is the value of the dollar used in the transaction, which, according to Yusko, has significantly worsened due to incessant money printing and currency debasement. The alarming loss in the purchasing power of the dollar has been accelerated by the creation of the Federal Reserve in 1913 and its continuous practice of printing money seemingly out of thin air. Now, the value of a dollar is less than 3 cents. Yusko argues that this compromised, debt-based system disproportionately favors the wealthy. An Oxfam report earlier this year revealed that the richest 1% of the world's population amassed nearly 2/3 of all new wealth created globally over the last 2 years, totaling $42 trillion. In the interview, Yusko explores potential solutions to reverse this trend for the world's largest economy.
History is replete with examples of what happens. Empires fall and they disappear. Roman Empire, gone. Ottoman Empire, gone. British Empire, gone. Now, England still exists and London's still a cool place to visit, but it's not the center of the universe. Now, the Ottoman Empire, literally gone. Roman Empire, gone. And again, Italy still exists, but they have no power the way they did when they were an empire. And what will happen is the same thing that happened in Germany, in Weimar, and every other empire that thinks that you can create wealth by printing money. Because let's think about this. If creating wealth was as simple as printing money, wouldn't every country just do that? Right? I have on my desk over there a 100 trillion Zimbabwe dollar bill. Zimbabwe tried this, right? 100 trillion wouldn't buy you a loaf of bread. That's not wealth. And same thing with Venezuela, Venezuelan bolivars, right? Or Argentinian pesos. You got the same problem. So the problem is this is a fundamental failure of leadership. It's when countries migrate towards dictatorship as opposed to democracy, and you concentrate the power in the very top with a very few people, and people make decisions that enrich themselves. I mean, I can't even believe, I think it was Mitch McConnell went on television and said, don't worry about that money we're sending to Ukraine. It's not going to Ukraine. It's going to U.S. military contractors. Now, if you mapped where those military contractors are relative to where the congressmen live, it's like a perfect correlation. To become a senator in the United States cost $100 million. How many people have $100 million? Not very many. So how do you get $100 million? You got to raise it. Well, if you raise it, and those people give you the money, they probably expect something for that, right? I mean, if I gave you $100 million, I would expect you to do something for me. So this system is broken. And the one way to fix it would be term limits and get the career politicians out. Second would be reform campaign finance. Now, they tried that. Hasn't worked very well because they allowed the super PACs, which are probably worse than the original structure. The other way you could do it would be from the bottom up, right? If people focused again on this innovation and wealth creation, and they were incentivized to invest in new technology. I'll give you an example. If we passed a rule that allowed people in their 401k and 403b to invest in venture capital, because think about this. If you're a 25-year-old kid, get your 401k, you literally can't touch the money for almost 50 years, right? Can't touch the money. Why would you be allowed to buy bonds? It should actually be against the law to own bonds in that portfolio. You should be mandated to invest in venture capital, in innovation, and give entrepreneurs capital to invent new businesses and create more Amazons and more Microsofts. But that's not what we do. What do? We force people to buy mutual funds and ETFs in traditional assets. Why? Well, because the people that wrote the laws are the people that run the businesses. This is crazy. The people at BlackRock and Vanguard wrote the law that guides how we invest our retirement. It's insane. How can they be on a committee that wrote the law? They're the beneficiary. That's a total conflict. That's how it works.
Yusko also explores solutions for the average everyday investor, offering insights on how to stay ahead amidst constant currency devaluation. According to the esteemed hedge fund manager, the most effective approach is to invest in blockchain technology, which he considers one of the century's most foundational innovations. Yusko asserts that blockchain holds the potential to generate more wealth for everyday investors than the combined impact of the two preceding technological waves. He estimates that Web 1 created approximately $2 trillion in wealth, and Web 2 added another $5 trillion. Yusko anticipates that the opportunities presented by blockchain, artificial intelligence, and other emerging innovations will far surpass the lucrativeness and significance of both Web 1 and 2. Yusko emphasizes that blockchain will play a pivotal role in transitioning from the trust-based system of traditional finance, which he views as flawed, to a more efficient truth-based system exemplified by Bitcoin and other reliable cryptocurrencies. Share your thoughts on Mark Yusko's interview and his perspective on the United States economy by participating in the conversation. Feel free to drop your comments and observations in the section below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.